Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with another update on the Russian economy. If you've been following the channel, you'll know that I recently posted a video talking about the fact that the Russian ruble had fallen below the critical level of 100 rubles to $1. And this was the first time in Russia's history that the ruble had fallen to such a low level, excluding a very brief period immediately following Russia's invasion of Ukraine. And as we discussed in that video, this was a landmark that President Putin was definitely not looking to achieve. Now, the Bank of Russia, which controls monetary policy, actually increased the official rate of interest by 100 basis points at its July meeting, and the next official meeting to talk about interest rates was not scheduled to take place until the 15th of September. However, as a direct result of the ruble falling below the critical 100 level, an extraordinary meeting was called on the 15th of August, and interest rates have been hiked by 350 basis points to the new level of 12%. And this news is really interesting because the current official rate of inflation in Russia is 4.3%, which is actually one of the lowest in the G20. And usually when countries are looking to adjust their interest rates, it's in order to combat inflation. But at face value, inflation in Russia looks to be completely under control. And if you believe the inflation figures coming out of Russia, there's a question mark as to why the ruble is depreciating in value so rapidly. So in today's video, I want to get to the bottom of exactly what's going on, because the whole situation is starting to look like a complete mess. So we'll go through the details of the extraordinary meeting that was held by the Bank of Russia and the criticism that the bank has faced over the course of the last 24 hours from President Putin's economic advisor. We'll have a look at what's going on right now with the Russian ruble, what the impact of this interest rate adjustment has been on the currency, whether or not it is now strengthening again. We'll then have a look at what is going on with inflation. We'll talk about what's happening with Russia's trade, because fundamentally there is a direct link between the strength of the economy and the strength of the currency. So the fact that the ruble has weakened significantly over the course of 2023 indicates that there are problems in the Russian economy. And then finally today, I'll wrap up with my summary as to what I think is going on in Russia right now and what the implications of this are for the Russian economy over the course of the next 3 to 6 months. Following the news that the Russian ruble had fallen to its lowest level against the US dollar and had breached the critical 100 rubles level, President Putin's economic advisor, Maxim Ereskine, came out and criticized the Russian central bank. The main source of ruble weakening and accelerating inflation is soft monetary policy. He wrote in a piece released by TASS, the Russian news agency, and he went on to say that the central bank has all the tools to normalize the situation in the near future, heavily indicating that the Russian central bank needed to step in and do something about this position. Now, up until this point, the Russian central bank had blamed the slide in the ruble on Russia's shrinking current account surplus, which is down 85% year on year in the period between January and July 2023. And on Monday the 14th of August, the bank said that it saw no financial stability risks from the ruble's weakening, but that a rate hike was possible soon. And as I mentioned at the start of the video, the next official meeting to talk about interest rates was scheduled for September the 15th. Now, up until this point, Russia's central bank governor, Elvira Nabiullina, had won plaudits for her handling of the economy in the immediate aftermath of Russia's invasion of Ukraine, but it now looks possible that she may be lined up as a scapegoat ahead of next March's presidential election, as the weak ruble and increasing inflation start to hurt consumers in Russia. And on a recent popular Russian television program, presenter Vladimir Solovyev launched an aggressive, expletive-ridden criticism of the central bank, saying that every country is laughing at us, at our ruble being one of the 3 weakest currencies, thanks to the genius policy of the central bank. However, Timothy Ash, a strategist at Blue Bay Asset Management, disagrees that it's the Russian central bank who are influencing the price of the ruble, but rather thinks that the weakening ruble is a damning indictment of Russia's war in Ukraine. It's being driven not only by lower energy receipts due to the loss of the bulk of the European gas business, but also by the success of the G7 oil price cap, the much higher cost of imports due to sanctions, and the continued capital flight. Within hours of President Putin's economic advisor, Maxim Oreshkin's criticism, the Russian central bank held an extraordinary meeting and hiked the official interest rate by 350 basis points to 12%. Inflationary pressure is building up and the decision is aimed at limiting price stability risks, the bank said in a statement on Tuesday the 15th of August. The pass-through of the ruble's depreciation to prices is gaining momentum and inflation expectations are on the rise. The Bank of Russia last made an emergency rate hike in February 2022 when rates were increased to 20% as an immediate reaction to Russia's invasion of Ukraine. So let's have a detailed look at exactly what's been happening to interest rates over the course of the last 15 months. This chart shows the movement in the official rate of interest in Russia dating back to March 2022. And you can see that at that time, the official interest rate was 7.75%. Immediately following the invasion of Ukraine, the central bank increased the rate to 20% as an emergency measure. However, surprisingly, within a very short space of time, the rate started to be reduced dramatically, coming down to 17% on April the 8th, 14% on April the 29th, 11% on May the 26th, 9.5% on June the 10th, 8% on the 22nd of July, and 7.5% on September the 16th. So what this shows is that over a period of 7 months, Russia increased its interest rate by 12.25%. However, it subsequently reduced the rate by 12.5%. And 7 months after the invasion of Ukraine started, the official rate of interest was actually lower than it was in Russia before the war. So in any set of circumstances, this looks like bizarre action that was taken by the Russian central bank. And if we look at what's been going on with inflation over the course of the last 12 months, you can see that 12 months ago, the official rate of inflation was 14.3%. And that is a high rate of inflation. When you compare that to the rest of the developed world, it's significantly higher. We've been talking about inflation of 9 or 10 or 11% causing major problems in economies like the USA, the UK and Canada. And as a result of that, all of those economies have been hiking their interest rates aggressively to try to bring inflation back under control. But Russia didn't seem to think that 14% inflation was a problem. And between September 2022 and July 2023, the official rate of interest was kept at 7.5%, which seems unusual because you would have thought that Russia would have tried to bring inflation back under control. And if we have a look at exactly what happened to inflation between September 2022 and July 2023, you can see that in the first 6 months of that period, it started to reduce slightly each month. However, in March and April, there was a dramatic reduction from 11% to 3.5% and then a further fall to 2.3%. And this was during a period when interest rates were unmoved. They were still at 7.5%. And then bizarrely, in May, June and July, inflation started to increase to 2.5, 3.3 and the current level of 4.3%. And this was all during the period when interest rates remained flat at 7.5%. And as I've mentioned in previous videos, all of this does feel a little bit bizarre. The official rate of interest in Russia stayed exactly the same between September 22 and July 23. However, we've got two different trends here. We've got a reduction in inflation and then an increase in inflation despite the fact that there was no movement in interest rates. And if we now go back to the interest rate chart, you can see that there was a 1% increase in July, and we've now had a 3.5% increase. So over the course of the last couple of weeks, we've seen an increase of 4.5% in Russia. And of course, as we're discussing in today's video, the reason that interest rates have just been increased is to try to improve the value of the Russian ruble. But there will be a knock-on consequence to inflation and the economy. But before we go on to talk about that, let's have a look at what's happened to the currency following the announcement of the 3.5% increase in interest rates. This chart shows the movement in the value of the Russian ruble against the US dollar over the course of the last 12 months. And if you've seen the recent video, you'll know that we've talked about this in some detail. There has been a consistent and continued decline in the value of the ruble over the last year. But in order to establish the impact of the change in the interest rates, let's have a look at what's happened over the course of the last week. And as you can see from this chart, on the 14th of August, for the first time in its history, excluding the initial impact following Russia's invasion of Ukraine, the value of the Russian ruble fell to less than 100 compared to $1. And this was seen as being a landmark moment and certainly something that President Putin never wanted to happen. And as a direct result, the Russian central bank have now hiked interest rates to try to bring the exchange rate back down and to try to start improving the value of the ruble. And you can see that immediately following the announcement of the increase in the interest rate, the exchange rate did come back down. And at one point, the ruble was trading for 94 against the US dollar. However, the initial impact of that announcement has started to dissipate, and the current position at the time of making this video is that $1 is equivalent to 98 Russian rubles. So this really isn't a significant movement. This isn't putting the ruble back to where it was prior to Russia's invasion of Ukraine, when it was trading somewhere in the region of 75 against the US dollar. It is a long way away from that, and it will be very interesting to see over the course of the next few days and weeks as to whether or not there is a long-lasting impact of this change in interest rates, or if this is just a short-term blip and the trend for the ruble continues on a downward momentum. Now, there are a lot of different factors that are taken into account when establishing an exchange rate between various currencies, but one of the biggest is what's going on with regards to the economy. Generally speaking, if an economy is doing well, then that country's currency will tend to perform strongly. If the economy is doing badly, then the currency will weaken. And the ongoing weakness of the Russian economy in the face of all of the sanctions are one of the major reasons why the Russian ruble has seen a significant deterioration in value over the course of the last 12 months. So moving interest rates isn't really going to change things. If Russia currently wasn't at war with Ukraine, then an increase in interest rates could potentially make Russia more attractive for overseas investment. However, Russia's current situation is very different. Because it's at war with Ukraine and a lot of countries have applied sanctions against Russia, moving interest rates doesn't improve the attractiveness of Russia as an investment. Countries like the USA, the UK, Canada are not interested in investing in Russia under any circumstances. They could increase their interest rates to 100% and there would still be no interest in putting money into the country. So that mechanism of driving up your currency by increasing interest rates to attract in more investment has disappeared from Russia's perspective. So if you take that off the table, the only other reason that interest rates will be increased is to try to get control of inflation. But as we've just seen from the official figures, the official rate of inflation right now in Russia is 4.3%. And when you compare that to the rest of the G20, Russia has a lower rate of inflation than France, Singapore, the Netherlands, Mexico, South Africa, Italy, Australia, Germany, India, the United Kingdom, Turkey, and Argentina. So at face value, there isn't an emergency problem with inflation in Russia. And from the official data that's been provided, the only reason that Russia has increased its interest rates so aggressively is to try to help the ruble recover its value. But what you can see from this chart is that it hasn't really worked. We haven't seen a huge movement in the exchange rate between the US dollar and the ruble, and it will be really interesting to see what the Russian central bank does next. This chart shows the daily value of Russian fossil fuel exports dating back to the 1st of January 2022. Now, in terms of the colour coding on this chart, the blue section at the bottom represents the value of coal exports. The large purple section above that represents the value of crude oil, which is obviously the biggest single export that Russia has. The light brown section above that represents liquefied natural gas. There is a very thin blue line representing liquid petroleum gas. The lilac section above that represents refined oil products, and the orangey brown section at the top represents pipeline gas. So if we start off by looking at the situation in January 2022, which was prior to Russia's invasion of Ukraine, you can see that at that time, Russia's total daily revenue from the sale of fossil fuels was around 775 million euros, which equates to around $850 million. Now, if you look at this chart, you can see that there are three vertical dotted lines, which mark significant milestones in terms of Russia's international trade. The first of these is marked on the 24th of February 2022, which was the day that Russia commenced its invasion of Ukraine. And interestingly, if you look at what happened to the total revenue for Russia, you can see that immediately following the invasion, there was a significant increase in the total daily revenue, which reached around 1.2 million euros or $1.3 million. And the main driver for that increase in total revenue for Russia was the significant increase in the price of natural gas. A lot of Europe was entirely dependent on those natural gas supplies for the production of electricity, and therefore a lot of countries had to keep buying Russian gas, and the cost of that gas increased by around 4 times. So this represented a huge increase in the total revenue that Russia was earning. However, since that point, we have seen a consistent decline in Russia's total revenues as a result of the fact that most of the countries in Europe decided that they no longer wanted to keep buying all of these Russian fossil fuels. And so strong efforts were made to find alternative suppliers. However, as we've discussed many times on the channel before, it's difficult to be able to replace natural gas supplies because the only way of doing that is to buy liquefied natural gas. And in order to convert that liquid gas back into a gaseous form, you need a regasification facility. So it took a lot of the countries in Europe around 12 months to be able to find alternative suppliers. If we then look at the other 2 milestones that are recorded on this chart, the first of these was the 5th of December, which is when the European Union introduced an outright ban on the purchase of all seaborne transported crude oil from Russia. And then we have the 5th of February, which is when an outright ban was introduced on the purchase of all seaborne refined oil products for the European Union. And you can see that following the introduction of both of those bans, there has been a reduction in the total revenue that Russia is earning both from crude oil and also from refined oil products. And if we look at the situation right now, you can see that the total daily value of Russia's fossil fuel exports is around 500 million euros or around $550 million. Which means that compared to the level of trade that Russia was achieving back in January 2022, so before the war started, Russia has seen a fall in its daily revenue of around 35%. However, if we compare the level of trade that Russia is doing today with the spike that was seen immediately following the invasion of Ukraine, there has been a fall of around 60%. And the reason I'm showing these figures and going through it in some detail is that the demand for Russian fossil fuels has a direct link to the value of the Russian ruble. And the 60% fall that we've seen in the level of trade that Russia is doing with the rest of the world is almost the same as the fall in the value of the ruble that we've seen over the course of the last 12 months. So what's the summary and conclusion today? Well, I wanted to post this video really to give you another update as to what's going on in Russia. And what we're seeing right now is a knee-jerk reaction to the ongoing decline in the value of the ruble. President Putin and his advisors are clearly very unhappy that the value of the ruble fell below 100 against the US dollar. And it's clear that the Russian central bank have been instructed to sort this situation out. Now, the only mechanism that's realistically available in the short term to be able to address this problem is to move interest rates. And an increase of 350 basis points is a significant movement and was a major surprise to the markets. Nobody was expecting this. We'd just seen a 100 basis point increase in July, so we didn't expect another 3.5%. And as we've seen from the data on the exchange rate charts, this hasn't really solved the problem. It hasn't materially improved the value of the ruble in the markets. So it's extremely likely that President Putin and his advisors are still furious about this situation and that they will now be telling the central bank that they need to do something else to try and improve the position. However, the underlying problem that Russia has is what's going on with its level of trade. Over the course of the last 18 months, Russia has lost the vast majority of its major customers, and it's had to find new customers and new markets. So we've talked a lot on the channel about the fact that Russia has improved the level of trade that it's doing with China and India. But unfortunately for Russia, that new business hasn't offset the business that it lost from all of the West. It's also having to sell all of its products at a discount to China and India to encourage them to take large volumes. And at the same time, there is now also a downward pressure on the price of oil and natural gas in the international markets as a result of the global slowdown. So this is the perfect storm from Russia's perspective, and the sanctions that are being applied against Russia are definitely hurting the Russian economy. As we saw in the trade data, Russia is earning significantly less today than it was this time last year. And one of the other problems that Russia is facing is that the new trade that it's doing with countries like China and India are being done with their currency. The contracts that are being put in place are in Chinese yuan and Indian rupees, not in Russian rubles. So the overall combination of all of these factors means that there's been a fall in demand for the Russian ruble. And we can see that clearly in what's happening in the exchange rate markets. The Russian ruble value has fallen dramatically over the course of the last 12 months. President Putin is very unhappy about this situation. He's telling all of his people to do something about it, to get out there and put the ruble back to where he thinks it should be. But unfortunately, you can't control the markets. That is the point of a market. It sets the price where supply and demand come together. There are obviously certain things that you can do to try to improve the price, but the overall big picture is that the price is the price. And unfortunately, from Russia's point of view, the price of the ruble is falling, and it's likely that even if Russia continues to increase interest rates over the course of the next few months, that the ruble will continue to fall in value because there is a reducing demand for rubles, and the amount of business that Russia is doing is also falling. So this is a very serious situation, and the bottom line here is that the value of the ruble is intrinsically linked to the success of the Russian economy. The Russian economy is not doing well right now, and that is dragging down the value of the ruble. So the only way that President Putin will be able to put the value of the ruble back up is by improving the performance of the economy. And that, unfortunately, is outside of his control because the sanctions are stopping Russia from doing a lot of business in order to encourage Russia to stop the war in Ukraine. So fundamentally here, to turn the corner, Russia will need to stop the war in Ukraine, and that doesn't look very likely over the course of the next 3 to 6 months. So it's likely that we are going to see continued deterioration in both the value of the ruble and the performance of the Russian economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.